Hello, Craig Dunkerley here, and going to talk about the markets, what we saw in the past week as the market was continuing to drop. I'm here with Claudia Harvey, and let's update on what happened through this week.
It has been a crazy week for everybody, hasn't it?
Absolutely.
Above all, we hope everyone is safe and happy and healthy in their homes as we social distance, and how this unprecedented event has taken over the world. And I'm so grateful to be here with you, Craig, to talk about what's happening, what you're seeing, so we can get it out to other people.
Absolutely. Yeah. People need to be in control of their money now, like we talk in Millionaires Club over and over. Hopefully some of the information we cover in this session will help them understand and think a little bit.
So you've been in the markets for a long time, and you follow Warren Buffett. And I mean, I think most of us know who Warren Buffett is. Can you tell us what you've seen in the markets and what sort of is transpiring this week?
Yeah, I follow a number of people, and yes, Warren Buffett. Also, I follow Robert Shiller a lot. Many people who see some of my videos know that I follow his PE ratio, the Shiller PE ratio, a lot, which I spoke about in the video earlier in this week. But basically, this today and through the past week, heard a lot about where this thing might settle down. Will it settle down? And I'm talking about the markets. Is there still room to fall, or is it bottoming out? And when I really look at it, and some of the information I was reading today, some of it actually from Robert Shiller, was there is a possible expectation that this market right now could still drop another 17%. Now,
Wow.
if we look at that, 17% from where we are right now at 19,000, we just closed today, that takes us down to 11,000. And that takes us all the way back to 2011. That's where the markets were in 2011. Now, if we're talking 17% off the 30,000 that we were originally at, talking about the Dow, that takes us down to 11,000, which is all the way back to 2000 or 1999. So many investors who've been in this market for many years, they are very likely going to see more erode from their investments if what is being said is actually going to occur.
So do you think it could be possibly worse than 2008? Because most of us still remember 2008. In fact, I launched my first business in 2008, and it was a struggle. So do you think it's going to be even worse than 2008?
There was a lot of talk over the last year or two that we should expect a recession, very likely in this year. Many were expecting it for May of this year. Unfortunately, it came earlier due to the coronavirus kicking things off as they have done now. The expectation was that it was going to be worse than 2008. And what we're seeing right now and what we're hearing right now is that it is moving very quickly and could be further.
So what do we as lay people do? I mean, I watch the markets. I'm absolutely impacted by the COVID-19 crisis that's happening. And I'm sure I'm not alone thinking that there's so much that we don't know and what's so uncertain. So what should we be doing? What do you think we should do?
If you listen to the powers that be, they're saying, be cautious with these markets. Some people, many of our clients, got out of these markets and moved into real estate investing over the last year or so, which appears to be still a solid investment based on if anybody watched our video from earlier in the week. But be careful with what you do in this market. I had some clients actually call me this week and say, Craig, I'm looking to borrow against my home and get some of the deals that are going to come in this market right now, maybe buy some blue chip stocks. Now, I'm not an advisor. I'm not going to tell people what they should or shouldn't do, but I will tell them to listen to what's being said out there. And is it really a good choice? I would never leverage my home to invest in stocks. I'll do it all day long to invest in bricks and mortar real estate, but not in stocks.
Why is that?
Well, stocks are paper. We're only seeing paper losses right now, but there is discussion and talk. At the end of this thing, we're going to see a number of companies that won't be around anymore. Especially we're hearing in the airline industry right now, there might be many of these airline companies not around anymore. Some will go under. So And we'll see that in many industries, many industries. It's where a lot of the talk is right now about which companies will survive. And if you're looking to get a deal on a stock right now, how do you know which one is actually going to survive, right? And how do you know if we're actually the bottom? There's very few Warren Buffetts in the world that can do this, right? And the average person, when they try to time the market, lose. And leveraging your house, absolutely putting yourself in debt into paper money, I believe is extremely risky.
Right.
And you don't know where it's going to go. And if you pick a company or a few companies that don't survive, even if they just file for Chapter 11, bankruptcy protection. I remember when the Air Canada went for bankruptcy protection a number of years ago. The average investors that were invested in them through the public markets lost their money. Their money was gone. Yet Air Canada continued to fly, and new investors came in, a large investment firm, bought them up, bought up the assets, and they kept flying. But the average investor who was invested lost.
Right.
So, again, there's very few Warren Buffetts in the world and who can do this skillfully and make money off of it.
So as we're really like in the throes of COVID-19 and the markets are in turmoil and everyone is social distancing basically in North America and the world, do you foresee this happening and continuing on for another 2 weeks, 3 weeks, 2 months? What do you see?
Well, COVID-19 is obviously creating an effect, a short-term effect right now. The challenge is many businesses are losing business, losing income, losing sales that is going to affect the longer term. They're not just losing sales from right now, as we talked about in our previous video. Trade shows are being canceled. Things are being canceled all around the world. And a lot of that sets up the sales for next year.
Right.
So coming out of COVID-19, however long it takes to do that, there is a longer term impact on the economy this time around than what we've seen in previous instances of the market dropping.
But we shouldn't scare consumers. Like we shouldn't say, like I'm hoping, and just being a consumer myself, of course, that I'm hoping that within 2 to 3 weeks, this all starts to pass and we start to open up and, the economy starts to get a little bit more robust again.
Yeah, absolutely. Things will start to pick up, hopefully, as this COVID-19 starts to decline. We should see things moving back up, but companies have been hit. Earnings for the year have been hit, and there is a good chance that a number of companies will take some time to recover from it, and some won't.
I guess the stay calm and carry on is what we should be doing. Continuing to watch the markets and continue to have advice from amazing people like yourself, I think is the way to go. So that's awesome.
Yeah, definitely. I'll run a few of these videos every week as I see certain things going on, and definitely stay connected. And I'll bring what information I'm seeing out there, what I'm hearing out there to these presentations, and hopefully it can help you make a proper decision as to what you should do with your money.
That's great. Well, we appreciate that because, again, you're more of the expert than a lot of us, so I truly appreciate that.
Thank you, Claudia.
All right. Well, have a wonderful weekend, everybody. Stay safe and healthy. And thank you again, Craig, for the great advice.
Thank you, Claudia. Have a great weekend, everyone. Thank you. Goodbye.